market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So we're keeping track of TSMC's earnings beats. Looking ahead, of course, to the ECB decision later, we'll bring you the latest lines on the U.S. election. Let's face it, there's a lot going on. Joining us now, Peter Elstrom, Bloomberg's executive editor for global tech, Chad Thomas, Bloomberg's executive editor for Europe, and Raffaella Tenconi, chief economist at ADA Economics. So thank you all for joining us. We'll try and tie all these things together. But Peter, let's start with you. Look, TSMC, I mean, you were here there also talking about ASML. And actually, there was a huge wipeout because people were concerned about the chip sector. But not all chip makers are created equal, is how I would say it.
That's exactly right. Yeah, all eyes were on TSMC after this ASML earnings report. It was so bad. They came in with bookings that were less than half of what people expected. And all the questions were around which of their customers are really in trouble. Well, now we know it's not TSMC. TSMC turned in a very strong quarter. They raised their guidance for the year for the future. They said they probably will spend even more on CapEx than had been expected. They're really benefiting from the AI trade here. They supply NVIDIA in particular and Apple. And we're seeing that there's this split within the chips market where if you're an AI, you're benefiting. Demand is still very, very strong. But there are other chip makers that are in much more trouble, in particular Intel and Samsung. So you got other issues with those companies.
Peter, what's fascinating, of course, for the chip industry is that it's also a trade war. It's in the middle of a trade. It's like oil was, 15, 20 years ago, because there's various chat about also the U.S., the Biden administration. We'll see what happens next in trying to block NVIDIA from selling to other countries. Like, where are we in like politics and chips?
Right. I think we still haven't seen the end of the Biden administration's efforts to try to limit exports, particularly to China and to some other countries that maybe are sensitive. But what we did see is the Biden administration made a very big bet with the CHIPS Act, trying to bring more of the domestic manufacturing back into the U.S. TSMC is one of the key companies in that entire ecosystem. So TSMC is making progress. They're getting a lot of demand from the AI companies in particular, but they're also by far the most advanced maker of these AI chips. So if you're in the AI business, and that includes NVIDIA, TSMC, and SK Hynix, the Korean company that supplies HBM, those guys are all doing very, very well, but there are struggles elsewhere in the industry.
All right, let's also talk about the U.S. elections. It's 19 days, but hey, who's counting? Until November 5th, the Democratic candidate, Kamala Harris, sat down for her first interview with Fox News as she seeks to broaden her appeal to conservative voters. Here she is.
Let me be very clear. My presidency will not be a continuation of Joe Biden's presidency. And like every new president that comes into office, I will bring my life experiences, my professional experiences, and fresh and new ideas.
Let's go to Chad Thomas now. Chad, so what were your main takeaways from the interview on Fox? She's, of course, being judged on the Biden administration's success or failures, but so she wants to try and break away from that.
Yeah, Francine, I mean, the main thing is that she sat down with Fox, right? She has been talking mostly to friendly news outlets since she became the candidate, and she sat down with them because she knows she needs to broaden her appeal. She is running out of time. As you said, we have 19 days left. What she tried to do in this interview is just ever so slightly put some distance between herself and Biden. She's walking a tightrope. She's still the vice president. She's still part of this administration. She has to defend it. But at the same time, she made it very clear that she is not Joe Biden and that if she wins the election, she will make changes in terms of policy.
Polls are so close, especially in the swing states that are so crucial. So what's the candidate's game plan in the next 20 days?
Well, the game plan has to be that they all broaden their appeal. They're trying to get those last voters who might be undecided. It's hard to believe at this point that there are those undecided voters out there. In the swing states, there are 7 that will determine the election most likely. Trump has a very narrow lead in 6 of those 7. So Harris is running out of time to convince people. People have already started with the mail-in balloting, so that time really is running short. By the way, Trump, he's trying to do the same thing. He spoke to Univision last night, trying to appeal to Latino voters.
Chad, when you look at some of, again, the polling in the swing states, is it all about the economy? or is it immigration? It's still, you know, when you sit abroad, I think you look at the U.S. and you think, how can this be so close? It seems that polls, Kamala Harris hasn't really moved up since, you know, that debate that she clearly won. So how does it play? Is it the economy or something else?
Well, people say it's immigration as a top priority in that discussion with Fox News last night. More than half of it was on immigration. Economy is up there in the top two. People still, even though some would say the economy is doing fairly well, people are not necessarily seeing that in their pocketbook. Where Kamala Harris really has an advantage is on questions around abortion, which is something that she tries to press in all of her interviews. Interestingly enough, though, Fox News did not ask her about that at all yesterday, and she didn't try to bring it up in the discussion as well.
Chad, thanks so much. Chad Thomas, our executive editor for government. Now let's bring in Raffaella Tenconi from ADA Economics. Raffaella, I mean, again, we're at this cross-section where we look at trade wars, technology. We look at some of the things that we heard, you know, in the election. And then we also spoke to Ted Pick, the chief executive of Morgan Stanley, and this is how he sees the election playing out. There he is.
We don't know what the policy reaction function is actually going to be off of what has been said. And for that reason, I think you have a number of investors that are actually just sort of continuing to plow forward on the view that the economy is in pretty good shape and that consumers and corporates are in great shape. So that when there is an election outcome, once there's a sense for whether new policy will actually get affected, then they can have a reaction.
Raffaella, how difficult is it at this point? I mean, we're 19 days away from the U.S. election to try and figure out what policy implications there will be depending on who gets into the White House.
So, I mean, this is a very tight election. So there is a degree of uncertainty that you cannot waive. Mm-hmm. But I feel, well, I assess that the Democrats are in the lead. I've had this position actually since December of last year, because this election is one where the positions were pretty much cemented for the past year. And what has been changing is whether people reveal their preference or not. So my impression is that, especially in swing states, the Democratic voters were quieter and didn't want to reveal themselves. With Kamala Harris, there has been an enthusiasm, and that's why you see it more in the polls. But I think this factor is still playing out. Mm. So, in my view, on margin, it's more likely to be a Democratic president with a split Congress. Mm-hmm. So she will not be able to deliver nearly everything that she says she will. But for financial market, what is important in my view is that in terms of cost of capital, fiscal prudence, international relationships, she will be smoother. Mm-hmm. A Trump presidency, on the other hand, I think people are downplaying that he will deliver what he's saying. It's his second mandate. There won't be a third one, right? So the impact on fiscal policy, the impact on the cost of capital, the sovereign risk is going to be profound in the next few years.
Raffaella, yesterday, Sonali Basak also spoke to Stan Druckenmiller, and he thinks actually the markets are priced for a Trump win.
And I must say, in the last 12 days, the market and the inside of the market is very convinced Trump is going to win. You can see it in the bank stocks. You can see it in crypto. I would have to guess Trump is the favorite to win the election now, but who knows what these polls even mean? No one even responds to them anymore.
I mean, again, and it's crucial that, depending on what happens with the Senate, where actually Democrats, it could go Republican, Democrats are trying to defend some of the red seats. Overall, what actually matters to markets? I mean, when you look at tariffs, and I want to ask Peter in a second, we've seen quite a lot of tariffs also from the Biden administration, but what do tariffs do to the U.S. economy?
Well, tariffs under a Trump presidency, I think, will definitely disrupt global trade. So it will have an inflationary effect. I think already under my central scenario, the Fed scope for easing is certainly 100 basis points, at maximum 150 basis points. So the market is already too bullish on that. With a Trump presidency, I think probably the scope is at maximum 100 basis points. Yeah. On top of that, I think Trump keeps on putting a lot of effort on the trade But in reality, the problem and the fortune of the U.S. is in the international investment position, which is in negative 22 trillion. And it needs funding, and it reflects also the stance geopolitically of the U.S. So the repercussions in the medium term are very severe. They start off with inflation, and they will end up in the cost of capital.
And Peter, you could also argue that actually what the Biden administration has done was continue some of the Trump policies, right? It's very anti-China. It's fighting for, the CHIPS Act and other things. That's not really quite translating through the electoral base.
They have continued with the general trend of being anti-China in terms of some of the technology shipments, but I'd say that the Biden administration has been much sharper in how they're executing that policy. Rather than use kind of the broad brush of tariffs in particular, they've focused in on the high technology products that really matter. They've had a couple of rounds of controls on their chip exports. In particular, that's hit NVIDIA, that's hit some of these other companies that want to be able to sell freely into China and have not been able to benefit from that. So we would, I assume, within the Harris administration, if she is able to win, there'd be somewhat of a continuation of that policy of targeting particular industries that they're concerned about, especially the high technology industries.
Thank you both for joining us. Peter Elfstrom there, Bloomberg's executive editor for Global Tech, and Raffaella Tenconi stays with us. We'll talk a lot more about the ECB next. Expected to cut interest rates for a third time this year. With inflation below target, has a cost of living crisis finally been tamed? Many question marks on that. We're live in Slovenia next, where the meeting is being held. This is Bloomberg. Welcome back, everyone. Now, the European Central Bank set to cut interest rates by 25 basis points later, despite policymakers ruling out such a move only a month ago. Now, with inflation below 2% for the first time in 3 years, it appears today's decision just needs a formal sign-off. Well, Bloomberg's Lizzie Burden is near Ljubljana, where the ECB is meeting today. So, Lizzie, walk us through what's made the rate cut expectation shift. And actually, the most important is what we're expecting to know about future decisions and future cuts.
Indeed, Francine. Well, 5 weeks seems like a very long time since the last meeting, because it really is an about-face in terms of the expectations. The reason that markets are almost fully pricing this rate cut today is not just that inflation is back below the ECB's target, but perhaps more importantly, all of these private business surveys showing weakness in the growth outlook. So as market expectations have shifted, you have seen the Governing Council actually largely endorsing those expectations, whether directly or indirectly. And as you say, the focus now turns to the path ahead. Markets expecting another cut in December. And in our survey, analysts expecting cuts back to back all the way until March, with another couple of cuts in June and December 2025. That would take the key rate to 2%. There's a lot of debate on the Governing Council, including publicly, about where the neutral rate lies. But I'm sure this will be the focus of the press conference with Christine Lagarde, giving a steer, many would hope, as to whether meeting-by-meeting cuts are on the table, and an answer to the question of what are you waiting for. I think the answer will be certainty on the labour market, certainty that inflation is indeed defeated, because this is an even more uncertain time than the last time they met in Frankfurt, not just because of the geopolitics around the Middle East, but also around the US election.
Lizzie, thanks so much. Lizzie Burden there in Slovenia. Now, don't miss our coverage of that ECB policy decision, 1:15 p.m. UK time, and President Lagarde's news conference half an hour later. Still with us, Raffaella Tenconi from ADA Economics. Raffaella, I mean, look, it's an exciting meeting because it's pretty much priced in, but then I don't know whether they're going to be like month by month. It seems that, data points could be a lot more complicated from now.
Not really. To some extent, what you have is a clear direction that the industrial sector is not really recovering as much, right? And the September inflation print clearly came below the 2% reading, so it relaxed the council. So I think going forward, it will be easier for the council to really see whether this rebound in exports and in investment that they've priced in is really materializing or not. Because if by the December meeting you really don't see any improvement, I mean, you know that there is quite a meaningful reduction in both the GDP and the inflation projection.
And I guess, I mean, the concern is that inflation, I mean, there's many question marks about the Middle East, there are many question marks about the U.S. election. And is there a danger that also the cut in interest rates takes a longer time to work its way through the economy? So we could see the early signs of a recession in Europe and rising inflation.
So in the case of the inflation rate at this stage, food and energy really influence heavily the fluctuation month to month, particularly food, which technically should probably be re-accelerating. So both weights are so significant that you could have a situation where the next 2 or 3 months of data is slightly up. But what is more important is that now the Eurozone has a negative output gap. Consumption clearly has peaked and it's barely stagnant. It's unlikely to pick up anytime soon. So you have this demand deflationary pressures that are now becoming more visible and really drive inflation. So even with these slight changes in oil, the trajectory is clearly below target.
How difficult, I mean, how does Christine Lagarde navigate this press conference? What should her main message be?
Well, ideally, her main message should be that she is ready to really deliver monetary policy from tight to loose, which would actually mean the deposit rate below 2%. But I don't think you're going to get that ideal. You'll probably get a signal that indeed there's been progress, that they're more comfortable. They clearly see some downside risk. Even before getting to the outcome of the U.S. election, there has been more trade tensions with China. So I think she will pave the way to potentially cut every meeting, but not commit to it, and she'll wait probably the December meeting to do that.
Okay, we'll have to get you back on to talk about the neutral rate. That's like a whole hour and a half of show. Raffaella Tenconi, chief economist at ADA Economics, joining us this morning. Now, coming up, Ukrainian President Volodymyr Zelenskiy is set to unveil his plan to EU leaders about how best to defeat Russia. We'll give you all of the details next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, EU leaders are meeting in Brussels today, with Ukrainian President Volodymyr Zelenskiy taking center stage. Also on the agenda, the issue of migration, which is once again set to be contentious. So let's get straight to Oliver Crook, who is in Brussels. So, Ollie, good morning. What can we actually expect from the leaders?
Yeah, so listen, this is the first EU leader meeting that we've had since that Draghi report came out, since the new commission has been sort of put in place, and the last before we get the U.S. election. And of course, what we're waiting for right now, which is why it's so crowded here right now, is President Zelenskiy, who is going to come here and maybe deliver some remarks. And what he's doing here in Europe is to deliver his victory plan before EU leaders and try to get some buy-in for some of the key ingredients he says he needs in order to defeat Russia. Some of these are not very new. One of the things that he is asking for is an invitation into NATO to show the goodwill that their security concerns could happen after the war. He wants his hands untied in terms of being able to strike within Russia. He's asked for a lot more heavy weaponry to be placed within Ukraine in the future. He said non-nuclear, but this is all in support of deterrence to Russia in the future. The real problem for him and for many EU leaders is that all of this is going to be very dependent for what happens on November the 5th in the United States and what president we get in the White House, because that will be very sort of major in determining what the European position will be, though it will be sort of consistent how much support they will have from the United States.
Yeah, I was going to say it's pretty punchy to do that ahead of November 5th. Ollie, thanks so much. Oliver Crook there with the very latest on the EU Leader Summit. So we'll have plenty more from Oliver throughout the day. Now, coming up, we'll discuss the energy transition as well as the future of Russian gas flows into the EU with the chief executive of the Italian energy operator Snam. We speak to Stefano Venier. That's next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. These are your top stories. TSMC beats estimates after hundreds of billions of dollars was wiped from global chip stocks following downbeat guidance from ASML. The ECB looks set to cut rates for a third time this cycle as inflation falls below the euro area's target. For the first time in 3 years, we'll be live in Slovenia, where the decision is taking place. Plus, Nestle cut its guidance as a Swiss food maker struggles to rebuild market share after higher prices turn consumers off branded products. Now, the EU's energy commissioner has warned that the region's gas companies against new deals to keep gas flowing from Russia through Ukraine. Now, a key gas transit agreement between Moscow and Kyiv expires at the end of the year. Negotiations are continuing to try to keep flows coming through the pipeline. So for a terrific roundup of all of this, before we get to the Snam chief executive, let's bring in Rachel Morrison, who leads our energy coverage in Europe. Rachel, thank you for joining us. I mean, this is complicated, but it's extremely crucial for any business that's doing, that's making things basically in Europe. What do we know about the deal? Are we closer to a deal that means that Russian gas could go through Ukraine?
Well, the transit deal, as you mentioned, ends at the end of the year, and negotiations are going on at the moment to try to find some kind of replacement. But from what we're hearing from sources, a deal isn't really very close. There's lots of options still on the table. We don't really know what the most likely is, and most sources think this is going to go right up to the wire. So the sort of 31st of December, maybe even into January.
And just to make it clear, I mean, Europe still relies on Russian gas.
Yes, it's one of the two remaining pipelines that still brings Russian gas to Europe. And then, of course, we've got LNG, and Europe has really increased the imports of LNG from Russia. So piped gas, we have managed to cut back dependency on that. But on the other side, we've increased imports of Russian LNG. So we are still dependent on that pipeline, and particularly some of the countries in Eastern Europe, quite close to that border with Ukraine, they rely on those gas flows.
So is it impossible to cut away from it? I mean, how do you replace it?
In theory, this winter looks all right. We've got high gas storage, so that's why the EU Energy Commissioner, the outgoing one, Kadri Simpson, felt confident saying we don't need this. But traders are always looking ahead to the next season, so it would be next year and trying to refill gas storage ahead of next winter that we'd feel the pinch of not having those flows.
Rachel, thank you so much for the terrific briefing. As always, now staying with energy, and the Italian gas distribution company Snam has approved a plan to achieve net zero by 2050. Now, it will invest 14.5 billion euros in the energy transition plan. This includes repurposing existing infrastructure. Now, for an exclusive conversation, we're joined from Milan by Stefano Venier, Snam's chief executive. Mr. Venier, thank you so much for being with us today. You've proposed this plan. First of all, when you look at energy, the energy complex, but also energy deals in Europe, why is a transition actually to cleaner energy so important for you and your company?
I think it's important because, with this transition plan, we are taking a commitment with all stakeholders for, let's say, a broader energy journey through transition. And I think this is important to drive the European situation, Italy, toward the net zero that is essential for the economy. I think what is important, it's taking this commitment. I think it's important coming out from the climate week that happened in New York a few weeks ago, from where we had the takeaway that certain, let's say, sustainable efforts were losing traction. And according to Bain's survey, 1/3 of the company are short on their 2030 Scope 1 and 2 targets. And I think this is an instrument that we set up in a credible and serious way with actions to move toward this 2050 net zero. And it goes also, sorry.
No, Stefano, I was going to ask, do you think the EU Green Deal, is alive and well? And actually, do you see enough, sustainable finance commitment? How important is that for the green transition?
These are essential. We have moved rapidly from 40% of the sustainable finance to 80%, and we are targeting 85% by 2027. And I think it's an essential instrument, given the massive investment we have to do on the transition part related to transportation facilities, but also for converting the energy production facilities. If you think globally, we have to convert more than 60,000 production units into a renewable and green units, and that's extremely important.
Stefano, we had a terrific briefing also from Rachel Morrison there about some of the gas transiting through Ukraine, of course, from Russia. What's the impact of the end of this gas transit agreement that will have on you, on Snam, but on Italy?
Well, I think on Italy, very, very negligible in the sense that the percentage of gas, Russian gas that is coming to Italy is around 5–6% of the global consumption. And I think let's say the stop in transit will not have significant impact on the available gas for next winter, given also the fact that the storage level, the gas in the storage is up to 97% right now, and it provides a reasonable 12 billion cubic meter of available gas for next winter. But of course, it doesn't mean in general that the situation is stable and we are over. We are still in a fragile situation given the global geopolitical situation we have and the exposure that now we have as Italy, as Europe, to the LNG trading.
But so, how much Russian gas do you still transport through the pipelines? And do you actually expect, come January 1st, 2025, for Russian gas to still flow to West?
I think there are discussions going on how to, let's say, guarantee certain volumes to Hungary, Austria, those countries that are still heavily dependent on these Russian flows. I think we should move progressively over these type of flows. As Italy, I think we have set up the adequate measures that next year we will have the second LNG terminal on stream that will provide and will increase the LNG capacity up to 40% of global demand. But I think markets are nervous because, of course, there are certain situations globally that will influence also the level of the prices. If you think that 20% of the global gas traded it comes through the Hormuz channel, or demanding on gas is still growing up. Last quarter we had in Asia plus 22% increase on that area, and globally the total amount of gas will grow by 2% this year. So we have growing demand on one side, pretty stable supply, and this, let's say, critical situations with respect to the trading of gas. And that is something we need to take into consideration in looking at the situation on, let's say, global basis, also with respect to the residual flows from Russia.
So, Stefano, what does it mean for Snam? Again, you're looking. You have this new energy transition plan, which you outlined today. That's a lot of investments. Does it? Will you dispose some of your foreign assets that you already have? How are you expecting Snam to be different in 12 months and then 3 years?
Okay, on one side, we will complete over the next 2 to 3 years the, let's say, actions to guarantee the security of supply for the country and eventually for the surrounding European countries, given the position the country has with respect to Northern Africa on one side. On the other side, we are, let's say, working on two key platforms, let's say, systemic platform like the carbon capture with the project we are, let's say, testing, and we started a month ago with E&I for the CO2 capture offshore Italy in the north part of Adriatic, and also on the other side on the hydrogen transportation through the South H2 corridor. That is one of the core corridors for bringing green hydrogen into Europe. And to that extent, a few days ago, we signed an MOU with Sonatrach and other entities to support this project that, of course, will take some years to be on stream, but it's, a mean for the transition toward the green or decarbonized molecules we need to have by 2040, 2050 to make the net zero, not only for Snam, of course, but for the economic system at all.
Stefano, you mentioned carbon capture, and actually this is really capturing the imagination of many investors. We found out yesterday that Eni is creating a carbon capture unit. Do you plan to be part of that or have a stake in it?
Yes, we are in the process. Of course, the Ravenna project is one of the core projects that will be part of that portfolio. So we are planning to be part of this project and to be part of this new, let's say, entity. We are, of course, in conversation with ERI to that extent. But let me say that the Ravenna project is the one that is up and running and is performing very well. So some of the expectation we had been proved by these first weeks of operating with a very comfortable perspective in terms of being a solution for the hard-to-abate industry, not only Italian, but also all the Mediterranean part, given the fact that this is the only project that can be developed with sizable scale in the Med.
Okay, Stefano, as always, thank you so much. Again, congratulations on this plan that you laid out today for the transition. Stefano Venier, their Snam chief executive, for an exclusive conversation joining us from Milan. Coming up, Polish convenience store giant Zabka makes its much anticipated trading debut in Warsaw. So we'll tell you how it's been faring next. This is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, we're looking at live pictures of the Ukrainian President, Volodymyr Zelenskiy, addressing EU leaders in Brussels. Again, he's presented his victory plan to lawmakers, trying to outline his vision for ending Russia's invasion and reiterating that the country would not accept a frozen conflict of trade territories for peace, crucial ahead of that November 5th election in the U.S. Let's listen in to Charles Michel.
We need a clear message without any ambiguity, and your presence here sends a very powerful political message without any ambiguity. We are on the same side, we share the same dreams, we share the same values. We are impressed by the bravery, by the courage of the people of Ukraine, by your personal bravery. You can count on the EU.
Thank you very much. Thank you very much, Mr. President. Dear Charles, thank you first of all for invitation. Good morning to everybody. Thank you for invitation and this possibility to join the Council and speak with leaders. And of course, for me, it's very important to share our victory plan with all the leaders who helped us. With your leadership from the very beginning of full-scale war, and with some no's which will be out of press. Of course, I want to speak about this 35 billions from 50 billions of Russian assets, the decision during G7, and now the finding right mechanism for getting this money as quick as possible to us. I said very openly now with the President that when we had very big gap, long months without military support, really our interior production of drones and electronic systems of electronic warfare helped a lot. And we need money for this, and partly this money from Russian assets we need very much to use for our interior production. So as soon as possible we want to get some money for this, and of course helping our people with housing and etc. who lost their houses. So that's important questions, military and financial support as
That is, of course, the Ukrainian President Volodymyr Zelenskiy after his European tour, speaking with Charles Michel, the President of the European Council. Our Ollie Crook, our reporter on the ground, will bring us any breaking news from that. Now, shares in Zabka have been a roller coaster ride this morning, rising 9% at the open as a convenience store chain made its much-anticipated trading debut in Warsaw. Well, Zabka's IPO is the largest in Poland since 2020 and Europe's fourth biggest this year. It valued the firm at just over $1.6 billion before the start of trading this morning. Well, we're delighted to be joined by Krzysztof Krawczyk. He is the chairman of Zabka. Thank you so much, Mr. Krawczyk. First of all, congratulations on an IPO. I know when share prices fluctuate, it's always very stressful. But talk to us concretely about maybe some of your expansion plans for the supermarket chain outside of Poland.
Very warm welcome from Warsaw. Indeed, it's just one step in the company's history, very important for the management team. But this is just the beginning of the new chapter. First of all, Poland is our core market, and there's still ample space for growth. We have strong conviction about the long-term potential of Polish consumer and the secular trends that we see in Poland. Having said that, indeed, Zabka does have international expansion plans. Last year, we acquired a distribution platform in order to build a presence in Romania. And we see what we saw in Poland, in the Romanian market, in the Romanian consumer and their need for convenience. These days, consumers are time hungry.
I know you also started in Romania last year. What's your general view on retail spending, the way that consumers, what they want, how they want it, for example, in Poland and Central Europe compared to the rest of Europe?
The last several months have been difficult for the consumers with rising prices, with high interest rates, and that's across Europe. And not any different in Poland. However, especially Central European countries still have a potential for growth. There are areas of the economy that continue growing, and Poland in particular is one of the strongest markets in Europe. The secular trends I was mentioning is, we are more and more busy and we don't want to spend time on shopping. This is why online is so predominant, and this is why Zabka has been so successful in Poland. Consumers want high quality products that they can eat on the go. Consumers want affordable prices, which we are trying to provide every day. And they want to be engaged. This is why we have invested so much in digital channels of Zabka.
There haven't been many IPOs, certainly not many IPOs of the one that we saw of Zabka and its size this morning. Do you things are getting better? I know it was a lengthy process. There was a lot of concern on energy, the war in Ukraine. But do you see, because you've priced at the high end, that things are looking a little bit up?
Well, we hope that this IPO will open up a more favorable window to the companies and will give confidence to the investors. Indeed, this year has been difficult for equity capital markets. There's been few IPOs. A lot of IPOs have been deferred or put on hold. But we hope that the fact that Zabka is green, and actually we had a pretty promising debut, that will encourage the investors community that this is time to look into new equities and participate in IPOs.
What will CVC look for next? Where's private equity going to strike?
Excuse me?
Where will private equity, CVC, what do you think they'll be interested in terms of sectors or companies in Poland and in the region?
Well, that's the most asked question to us. We obviously are not commenting what is in our pipeline, but we believe that, especially in Central Europe, the consumer-related industries, continue to have a really long runway and strong potential. We are in the midst of a tender offer for a software business in Poland that is still pending, but we are hopeful to close it successfully. So tech is also the space that is interesting to us. Some industries with long-term potential, like healthcare and pharma, are also on the radar of many private equity firms in the region.
Krzysztof, Krawczyk, thank you so much for joining us. That was the chairman of Zabka joining us this morning on the back of their IPO. Coming up, Europe's biggest consumer staples firms lowers its full-year guidance just weeks after naming a new chief executive. More on Nestle next, and this is Bloomberg. A few big corporate stories, many big corporate stories we're watching this morning. More on TSMC beating estimates with Tom in a second, but let's start with Nestle, which has cut its sales and profit guidance for the year. For that, we're joined by Dasha Afanaseva. Dasha, why is Nestle struggling so much?
Well, on the one hand, you had the global economic environment. Obviously, the consumer stretched in a lot of its market. Demand is subdued, and the chief executive warns that this is going to continue. But on the other hand, this has been totally exacerbated by lots of operational failings. So you've got supply chain issues, IT issues, supply constraints at various units. And that time and time again, it looked like Nestle was caught out by things like the weak consumer, for example, on the lower end. So now the role of the new chief executive, Laurent Freixer, is to emphasize that he's able to both fix those operational constraints to get Nestle on a longer-term path to growth, and also maybe do some portfolio adjustment to get it to that mid-single-digit growth in the medium term.
So Nestle, getting hurt, you can see the share price. TSMC, so yesterday ASML put everyone in a panic, but actually TSMC is like, no, guys, it's okay depending on who you sell to, these chips.
Yeah, that is certainly part of the question, certainly part of the story around TSMC. And as a reminder, we have to put chips into different baskets. There's industrial, there's the autos, and then there's AI accelerators. And TSMC reminding us that the strength, the demand is still there. To your point, from customers like NVIDIA, AMD, of course, who are commanding and ordering these chips from this foundry maker. So the earnings came in, 54% increase over the quarter. Margins were higher. The forward guidance was upgraded as well in terms of the sales picture. They expect around 30% increase in sales this year. They had expected around mid-20%. CapEx is going to be increased as well next year. This key line from the CEO of TSMC on the AI question, the demand, he says, is real, and I believe it is just the beginning.
There you go. In 60 seconds, a full roundup of everything you need to know in terms of earnings today. Tom McKenzie and Dasha Afanaseva. Now, up next to Bloomberg Brief, Danny Berger is in New York. There's a lot going on. There's the ECB, so we'll look at any fallout, of course, from euro-dollar. We look at tech, and then we look at China. A little bit of disappointment there in what they put in place for the real estate sector. This is Bloomberg.